Question 1. What is the primary purpose of underwriting in the insurance process? A. To increase the premiums for all policyholders. B. To assess and determine the risk involved in insuring a potential policyholder. C. To issue policyholders their coverage documents. D. To handle claims and determine payouts. Answer. B. To assess and determine the risk involved in insuring a potential policyholder. Explanation. Underwriting plays a critical role in assessing the potential risks associated with a policyholder before issuing an insurance policy. The underwriter evaluates factors such as the applicant's risk profile, including their claims history, health status, occupation, and other variables, to determine whether the insurance company should accept the application, or terms such as premiums and coverage limits. This process helps the insurer avoid taking on too much risk and ensures that premiums are aligned with the risk the insurer is assuming. The other options are incorrect because underwriting specifically involves risk assessment, not issuing policies, increasing premiums, or handling claims. Question 2. Scenario. Mr. Davis, the owner of a construction company, applies for a commercial property insurance policy. He has a history of multiple claims for workplace accidents and property damage. Based on the underwriting guidelines, what is the most likely outcome of his application? A. The application will be automatically approved because he is applying for commercial insurance. B. His application will be declined due to his claims history and high-risk factors. C. He will be offered a policy with higher premiums but no other restrictions. D. He will be asked to provide additional safety measures before the policy is considered. Answer. B. His application will be declined due to his claims history and high-risk factors. Explanation. When underwriting a construction company's commercial property insurance, one of the key factors that underwriters evaluate is the applicant's claims history, which reflects past risk exposure. Mr. Davis' history of multiple claims for workplace accidents and property damage makes him a high-risk candidate. Underwriting guidelines typically factor in this history, and insurers may choose to decline the application or offer very limited or high-priced policy. Declining the application is the most likely outcome in this scenario, as the underwriter must protect the insurance company from undue financial risk. Offering policy with higher premiums, option C, might be possible, but based on his claims history, denial is more probable. The other options do not fully align with underwriting practices regarding high-risk applicants. Question 3. What factor is most likely to influence the premium amount for property insurance? A. The applicant's profession and income level. B. The geographic location and risk of natural disasters. C. The applicant's age and marital status. D. The color and condition of the property. Answer. B. The geographic location and risk of natural disasters. Explanation. In property insurance underwriting, one of the major factors influencing the premium amount is the geographic location of the property. This includes the risk of natural disasters such as floods, earthquakes, hurricanes, or wildfires that could cause significant damage to the property. The higher the likelihood of a catastrophic event in a particular area, the higher the premium. Insurers must factor in these potential losses when calculating coverage costs. While an applicant's profession and income, option A, may influence other aspects of underwriting, it does not directly impact the property's risk. Age and marital status, option C, also have limited relevance to property risks. The color and condition of the property, option D, may influence minor aspects of underwriting, but geographic location and risk of natural disasters have the greatest impact on premium calculations. Question 4. Which of the following underwriting factors is most likely to increase the premium for automobile insurance? A. A clean driving record with no accidents. B. A high-risk vehicle such as a sports car or luxury vehicle. C. A location with a low rate of traffic incidents. D. The vehicle's age being over 10 years old. Answer. B. A high-risk vehicle such as a sports car or luxury vehicle. Explanation. Underwriting factors for automobile insurance premiums consider the vehicle's type and risk profile. High-risk vehicles like sports cars or luxury cars typically come with higher premiums because they are more expensive to repair, more likely to be involved in accidents, and are more frequently targeted for theft. Clean driving record, option A, and location with rate of traffic incidents, option C, would typically result in lower premiums. The vehicle's age, option D, may have some impact, but the vehicle type and associated risks play a much stronger role in premium determination. Question 5. Scenario: Mr. Thomas recently applied for life insurance coverage. The underwriting team finds that he has a history of high blood pressure and a family history of heart disease. What is most likely to occur in his case? A. Mr. Thomas will automatically be denied coverage based on his health history. B. Mr. Thomas will be approved for standard coverage without any additional requirements. C. Mr. Thomas will be offered coverage with an increased premium due to his health risks. D. Mr. Thomas will be advised to improve his health before applying for insurance. Answer C. Mr. Thomas will be offered coverage with an increased premium due to his health risks. Explanation: when an applicant has a history of high blood pressure and a family history of heart disease, the underwriting team evaluates the additional health risks involved. In such cases, rather than denying coverage outright, underwriters will typically offer coverage but with an increased premium to account for the higher potential risk associated with the applicant's history. Option A is unlikely unless the health condition is particularly severe, while B is incorrect because his health history would likely lead to a higher premium. Option D is not a typical response unless the applicant is at a stage where they are unable to obtain insurance. Question 6. Which of the following is an example of an operational hazard that could influence underwriting decisions? A. A building located in a floodplain. B. A driver with a history of speeding tickets. C. A company that fails to implement basic safety protocols. D. A property located in an area with high crime rates. Answer C. A company that fails to implement basic safety protocols. Explanation: operational hazards refer to risks that arise from the way a business operates, including its safety measures, training, and procedures. A company that fails to implement basic safety protocols is considered a higher risk for potential accidents and claims, which would influence underwriting decisions, while a building in a floodplain, option A, a driver with a history of speeding tickets, option B, and a property in a high-crime area, option D, may be factors in underwriting. They are more related to environmental or behavioral hazards rather than operational risks. Question 7. Which of the following is least likely to be included in an insurance policy endorsement? A. An extension of coverage for an additional insured. B. A modification of the policy's deductible amount. C. Change in the policyholder's address. D. Clarification of the policy's exclusion for natural disasters. Answer C. A change in the policyholder's address. Explanation: insurance policy endorsements are used to add, remove, or modify coverage terms, while endorsements can be used to extend coverage to additional insured parties. Option A. Change deductible amounts. Option B. Or clarify exclusions. Option D. Changing the policyholder's address is typically handled by policy amendment rather than an endorsement. Address changes are administrative updates rather than changes to the terms of coverage. Question 8. Which of the following best describes the role of predictive analytics in modern underwriting? A. Predictive analytics is used to automate the underwriting decision without human intervention. B. Predictive analytics helps underwriters determine a customer's exact premium based on detailed data. C. Predictive analytics replaces the need for any manual risk assessment processes. D. Predictive analytics helps identify emerging risks and improve the accuracy of underwriting decisions. Answer D. Predictive analytics helps identify emerging risks and improve the accuracy of underwriting decisions. Explanation: predictive analytics in modern underwriting involves using data-driven insights to predict future risks, including emerging risks such as climate change or cyber threats. By analyzing vast amounts of data, underwriters can make more accurate and informed decisions. It does not replace human intervention entirely, A, or eliminate manual risk assessments, option C, but rather enhances the process. While predictive analytics can help determine premiums, option B, its broader use is to identify patterns and trends that help underwriters assess risks more effectively. Question 9. Scenario: Ms. Miller is applying for a homeowner's insurance policy. During the underwriting process, it is revealed that her property is located in an area prone to wildfires, but she has installed state-of-the-art fire suppression systems. How would the underwriter most likely proceed? A. Ms. Miller will be denied coverage because of the wildfire risk. B. Ms. Miller's premium will be higher due to the wildfire risk. C. Ms. Miller's fire suppression systems will negate any premium increase. D. Ms. Miller will be offered standard coverage at discounted rate due to the fire suppression systems. Answer B. Ms. Miller's premium will be higher due to the wildfire risk. Explanation: While Miller's fire suppression systems reduce the risk, the property is still located in wildfire-prone area, which remains significant risk factor. Insurance underwriters take such risks into account when determining premiums, and properties located in high-risk areas like wildfire zones will typically incur higher premiums. While the fire suppression systems may help lower risk to some extent, the overall risk remains, and thus the premium will likely be higher. Option B. The other options are unlikely, as the wildfire risk would still affect the pricing despite the safety measures. Question 10. Which of the following is most likely to be considered a moral hazard by an underwriter? A homeowner who installs an advanced security system after an attempted break-in. B. A driver who regularly violates traffic laws and has multiple accidents. C. A company that implements a comprehensive employee wellness program. D. A business located in a high-crime neighborhood. Answer: B. A driver who regularly violates traffic laws and has multiple accidents. Explanation: moral hazard refers to the increased risk of loss arising from the behavior of the insured. A driver who consistently violates traffic laws and has multiple accidents represents a moral hazard, as their actions increase the likelihood of future claims, while the other options A, C, D involve risk management or situational risks. Option B pertains to behavior that increases risk, making it a classic example of moral hazard. Question 11. Which of the following underwriting techniques is most often used when determining the acceptability of a risk in property insurance? A. Underwriting by inspection. B. Underwriting by experience. C. Underwriting by risk pooling. D. Underwriting by prediction. Answer: underwriting by inspection. Explanation: in property insurance, underwriting by inspection is commonly used to evaluate the physical condition of the property, the presence of risk management measures, e.g., fire prevention systems, and other characteristics that could impact the insurance risk, while underwriting by experience, option B, and risk pooling, option C, can be used in other contexts. Inspection is the most direct and specific method. Property insurance. Question 12. What is the primary purpose of using a loss ratio in underwriting decisions? A. To determine whether a claim will be paid. B. To assess an insurer's profitability and the adequacy of premiums. C. To set the deductible amount for policyholder. D. To determine the validity of an insurance application. Answer: B. To assess an insurer's profitability and the adequacy of premiums. Explanation: the loss ratio is a key indicator used by underwriters to assess whether the insurer is collecting sufficient premiums relative to the claims being paid. High loss ratio indicates that claims are consuming a large portion of the premiums, which may affect profitability. Option A is incorrect because loss ratios are not directly used to assess claim validity. Option C is related to the policy's terms but is not the purpose of loss ratio, and option D is unrelated to loss ratio analysis. Question 13. Scenario: Mr. Walker is applying for workers' compensation insurance for his construction business. His company has had several small accidents over the past 2 years, resulting in minor injuries and claims. How might this history impact the underwriting decision? A. Mr. Walker will automatically be denied coverage due to his company's accident history. B. Mr. Walker may face higher premiums or additional safety requirements due to the claims history. C. Mr. Walker's company will receive a premium discount due to the claims history. D. The underwriting decision will be made based on the severity of the injuries in the claims. Answer: B. Mr. Walker may face higher premiums or additional safety requirements due to the claims history. Explanation: a history of accidents and claims generally increases the risk associated with the business, leading to higher premiums for workers' compensation insurance. Underwriters will assess the frequency and severity of claims, but typically more claims lead to higher premiums or a demand for additional safety measures to mitigate future risks. Option A is unlikely unless the claims are particularly severe or frequent, and option C contradicts the typical outcome of increased risk. Option D is not the key factor in underwriting, but rather the overall claims history. Question 14. Which of the following would be considered a physical hazard in underwriting? A. A person with a history of substance abuse. B. A building with a worn-out electrical system. C. A business in a flood-prone area. D. A property with inadequate security measures. Answer: B. A building with a worn-out electrical system. Explanation: A physical hazard refers to a tangible factor that increases the risk of loss or damage. A worn-out electrical system in a building presents a direct physical hazard as it could lead to fires or electrical malfunctions. The other options C, D relate to moral hazards, substance abuse, environmental hazards, flood-prone area, or operational hazards, security measures, physical hazards. Question 15. Which of the following underwriting guidelines is typically not specific to the type of insurance being underwritten? A. Guidelines for evaluating risk factors. B. Guidelines for determining premium rates. C. Guidelines for investigating insurance fraud. D. Guidelines for evaluating the applicant's health. Answer D. Guidelines for evaluating the applicant's health. Explanation. Guidelines for evaluating health risks are specific to life and health insurance underwriting, but they are generally not applicable to property or casualty insurance. The other options, A, B, C, are relevant across different types of insurance as risk evaluation, premium determination, and fraud investigation are integral to all underwriting processes. Question 16. Which of the following is least likely to be included in a health insurance underwriting process? A. The applicant's medical history. B. The applicant's occupation and job risks. C. The applicant's level of education. D. The applicant's family medical history. Answer C. The applicant's level of education. Explanation. In health insurance underwriting, an applicant's medical history, occupation-related risks, and family medical history are relevant factors. However, an applicant's level of education is typically not considered as part of the underwriting process, as it does not directly impact the risk of health claims. Question 17. What is the purpose of its surplus line to insurer in the underwriting process? A. To write insurance policies that cannot be placed with standard insurers. B. To provide reinsurance for primary insurers. C. To determine the acceptable risks for traditional insurers. D. To process claims for high-risk policies. Answer A. To write insurance policies that cannot be placed with standard insurers. Explanation. Surplus lines insurers specialize in writing insurance for high-risk or unusual policies that cannot be placed with standard insurers. This typically includes coverage for specialized industries, high-risk individuals, or unique situations they operate in, a more flexible regulatory environment to handle these risks. Question 18. Which of the following best describes moral hazard in the context of underwriting? A. A risk arising from environmental factors such as natural disasters. B. A risk arising from the behavior of the insured, such as negligence or fraud. C. A risk related to the physical condition of the property being insured. D. A risk associated with the underwriting of new and unknown insurance products. Answer B. Risk arising from the behavior of the insured, such as negligence or fraud. Explanation. Moral hazard refers to the increased risk resulting from the behavior of the insured. It often involves actions like fraud, negligence, or unethical behavior that increase the likelihood of a claim being filed. It is a key consideration in underwriting because it can lead to higher insurance losses. The other options are related to different types of hazards, such as environmental or physical hazards. Question 19. Scenario. MS. Taylor is applying for business interruption insurance for her restaurant. The underwriter notices that her business relies heavily on a single supplier for key ingredients and there is no backup plan in place in case of supply chain disruptions. How will this likely affect her underwriting process? MS. Taylor will be denied coverage for her business interruption insurance. MS. Taylor will be required to purchase additional coverage for supply chain disruptions. C. MS. Taylor will face higher premiums or a restricted coverage offer. D. MS. Taylor will be automatically approved for coverage with no additional requirements. Answer C. Yes. Taylor will face higher premiums or a restricted coverage offer. Explanation. Businesses that rely heavily on a single supplier are considered riskier as disruptions in the supply chain could cause significant financial losses. In this case, the underwriter would likely adjust the premiums upward or offer restricted coverage to reflect the risk of business interruption. While coverage may still be granted, additional safeguards or higher premiums are likely. Options A and B are less likely unless the supply chain risks are extreme, and D does not address the potential risk adequately. Question 20. Which of the following is most likely to be considered a judgment rating factor in underwriting? A. The applicant's claims history. B. The applicant's credit score. C. The applicant's age and gender. D. The applicant's business's location. Answer A. The applicant's claims history explanation. Judgment rating is a form of underwriting where the underwriter uses their professional judgment to assess the risk based on the individual circumstances of the applicant. An applicant's claims history is an example of factor that might be assessed through judgment rating as it provides insight into the applicant's risk profile. The other factors, B, C, D, are typically assessed through other rating methods like or classification-based ratings. Question 21. Which of the following would most likely lead to the rejection of an applicant for life insurance? A. A family history of cancer. B. A recent heart attack. C. A history of high cholesterol. D. A recent job promotion. Answer B. A recent heart attack explanation. A recent heart attack indicates a serious medical condition that could significantly increase the risk of death, making it a major factor in life insurance underwriting. While family history and high cholesterol can raise concerns, they do not necessarily lead to outright rejection unless they contribute to a higher than acceptable risk. A job promotion, option D, is irrelevant to life insurance underwriting. Question 22. Which of the following best describes the function of an underwriter's manual rating system? A. It calculates premiums based on actuarial tables and pre-established rates. B. It assesses each applicant individually based on a wide range of factors. C. It uses machine learning algorithms to set premiums dynamically. D. It determines whether to accept or decline high-risk applicants. Answer A. It calculates premiums based on actuarial tables and pre-established rates. Explanation. Manual rating involves using standard actuarial tables and predefined rates to calculate premiums. It is often used for standard risks where the applicant's characteristics fit within established categories. Option B describes judgment rating, while C refers to more advanced systems like predictive analytics. Option D is not an accurate description of manual rating. Question 23. Which of the following actions would most likely help an insurer lower their underwriting costs? A. Offering policies with low deductibles. B. Implementing advanced data analytics for risk assessment. C. Reducing the number of policies they offer. D. Increasing premiums for high-risk customers. Answer B. Implementing advanced data analytics for risk assessment. Explanation. By using advanced data analytics, insurers can more accurately assess risks and make better underwriting decisions, thus reducing overall underwriting costs. This can help minimize the need for costly manual interventions and reduce the likelihood of claims. Option A might increase the insurer's costs due to higher payouts for low deductibles, and option C would reduce the insurer's business but not necessarily lower underwriting costs. Option D could increase premiums but would not necessarily reduce underwriting expenses. Question 24. In the context of underwriting, which of the following is considered a moral hazard? A. A driver with a history of multiple accidents. B. A person with high blood pressure applying for life insurance. C. A property owner who intentionally fails to maintain their property to reduce premium costs. D. A smoker applying for health insurance. Answer C. A property owner who intentionally fails to maintain their property to reduce premium costs. Explanation. Moral hazard refers to the risk of a person behaving in a way that increases the likelihood of a loss because they do not bear the full cost of that risk. In this case, the property owner intentionally neglecting maintenance to reduce premiums is an example of moral hazard, as the person is acting recklessly to save money at the expense of the insurer. Other options A. B. D. Describe situations where the applicant's health or driving record might increase risk but don't involve intentional harmful behavior. Question 25. Which of the following is least likely to be included in an underwriting decision for a homeowner's policy? A. The value of the home. B. The homeowner's credit score. C. The homeowner's car insurance history. D. The presence of smoke detectors in the home. Answer C. The homeowner's car insurance history. Explanation. While homeowners' credit score, the value of the home, and the presence of safety devices like smoke detectors are commonly considered in underwriting decisions for homeowners insurance, the homeowner's car insurance history is generally irrelevant to the underwriting process for property insurance. The only exception might be if the homeowner's overall risk profile is being assessed as part of a portfolio approach. Question 26. Scenario. A small business owner in Louisiana has applied for commercial property insurance. The underwriter notes that the business is located in a hurricane-prone area and the building is not properly reinforced to withstand high winds. How might this affect the underwriting decision? A. The business will be automatically declined for coverage. B. The premiums will likely be higher due to the increased risk. C. The underwriter will approve the policy without any changes. D. The coverage will only be offered for specific risks like theft and fire, excluding storm-related damage. Answer B. The premiums will likely be higher due to the increased risk. Explanation: in Louisiana, where hurricanes are a known risk, the underwriter will likely increase premiums or impose special conditions, e.g., requiring certain reinforcements to the building to address the heightened risk. The increased premium compensates the insurer for the additional risk of storm damage, while A is unlikely. C and D do not address the proper adjustment. Question 27. Which of the following is most commonly used as a measure to assess an applicant's potential risk in health insurance underwriting? A. Applicant's marital status. B. Applicant's previous health insurance claims. C. Applicant's business ownership history. D. Applicant's income level. Answer B. Applicant's previous health insurance claims. Explanation: an applicant's previous health insurance claims provide valuable information to underwriters because they reflect the applicant's overall health risks. History of frequent or costly claims may indicate higher future health risks influencing the underwriting decision, while marital status, A, business ownership, C, and income, D, might affect certain underwriting decisions. They are not primary factors. Assessing health insurance risks. Question 28. What does underwriting by classification involve? A. Using an individual's personal health history to determine premium rates. B. Grouping applicants into categories based on similar risk factors. C. Using actuarial tables to estimate future claim probabilities. D. Assessing an applicant's criminal background. Answer B. Grouping applicants into categories based on similar risk factors. Explanation: underwriting by classification involves grouping applicants with similar risk profiles into categories or classes and assigning them premiums based on the characteristics of those classes. This is common in health, auto, and life insurance. The other options describe different aspects of underwriting but not classification specifically. Question 29. Which of the following factors is most likely to lead to a decrease in an applicant's auto insurance premium? A. The applicant's history of traffic violations. B. The applicant installs anti-theft devices in their car. C. The applicant's age and gender. D. The applicant's history of filing claims. Answer B. The applicant installs anti-theft devices in their car. Explanation: anti-theft devices reduce the risk of theft, which in turn lowers the insurer's risk. Insurers may offer premium discounts for vehicles equipped with these devices. Options A and D typically increase the risk, leading to higher premiums, and C may influence premiums based on statistical risk but is not as directly tied to the reduction of risk as the installation of anti-theft devices. Question 30. Scenario: an applicant for a life insurance policy has a family history of heart disease but is otherwise in good health and maintains a regular exercise routine. How might this affect the underwriting decision? A. The applicant will be denied coverage due to family history. B. The applicant will face higher premiums due to the increased hereditary risk. C. The applicant will receive a discount due to their healthy lifestyle. D. The applicant's family history will have no effect on the underwriting decision. Answer B. The applicant will face higher premiums due to the increased hereditary risk. Explanation: a family history of heart disease increases the risk of the applicant developing similar conditions even if they are in good health now. Underwriters generally account for this increased risk by offering higher premiums even if the applicant leads a healthy lifestyle. The other options, A, C, D, do not correctly reflect the typical underwriting approach for such situations.